We start off tonight with the World Bank, as its president, Ajay Banga, has advised global policymakers to avoid quick responses to the US President Donald Trump's policy announcements. Banga emphasized the importance of understanding the full scope of executed policies and urged clear, reasoned arguments when engaging with Trump. Banga also addressed potential World Bank challenges from US travel restrictions, but noted operations remain unaffected for now. On staff return policies, Banga confirmed no plans to expand beyond the current 4-day in-office mandate, contrasting Trump's 5-day federal worker directive. The European Central Bank's quarterly lending survey has revealed that Eurozone banks significantly tightened credit access for firms in Q4 2024, surpassing prior expectations. Banks cited heightened risks tied to the economic outlook and lower risk tolerance, with commercial real estate, retail, construction and energy-intensive sectors most affected. Despite hopes for easing, credit standards for mortgages remained unchanged, disappointing earlier forecasts. In Q1 2025, banks anticipate further tightening for both firms and households, signaling continued weak lending growth. The British Retail Consortium has reported that shop prices in the UK declined by 0.7% annually in January, easing from December's 1% drop, the sharpest in over 3 years. However, food prices rose 0.5% monthly, the fastest pace since April 2024. Retailers face rising costs, including higher employer taxes and a minimum wage increase, and a new packaging levy introduced by Finance Minister Rachel Reeves. The BRC warns these pressures could push prices higher, impacting UK households. Inflation, meanwhile, which fell to 2.5% in December, is expected to rise, with some forecasts predicting a 3% increase in January. Staying in Britain, and Prime Minister Keir Starmer has reaffirmed the government's commitment to prioritising economic growth, unveiling plans to unlock over £100 billion in corporate pension surpluses for reinvestment. The announcement, made during a meeting with top business leaders in London, is part of the government's broader strategy to stimulate wealth creation and drive sustainable economic growth. Finance Minister Rachel Reeves is set to deliver a key speech on Wednesday, detailing her strategy to revive Britain's sluggish economy. The BDI Industry Association has expected the German economy to shrink by 0.1% in 2025, marking 3 consecutive years of contraction for the first time since reunification. High energy costs, increased competition, and structural weaknesses since 2018 are blamed for the downturn. BDI President Peter Leibinger urged urgent investment in infrastructure and innovation, while warning that US tariffs under President Trump could worsen the decline to 0.5%. The crisis has sparked challenges for key industries like auto manufacturing, highlighting Germany's struggle to maintain its economic leadership in Europe. The National Statistics Institute has reported that Spain's unemployment rate fell to 10.61% in Q4 2024, the lowest since 2008. This marks a significant drop from 11.21% in the previous quarter, exceeding economics forecasts. The economy added 468,000 net jobs in 2024, driven by a booming tourism sector, with over 90% of new jobs in services. Economy Minister Carlos Cuerpo announced plans to raise Spain's GDP growth forecast from 2.5% for 2025, contrasting with weaker growth predictions in France and Germany. Italian Prime Minister Giorgia Meloni has emphasized the interconnectedness of US and European economies and vowed to collaborate with the US on addressing tariff issues, acknowledging that the trade surplus concern is not unique to the Trump administration.
Ho già risposto altre volte, guardi, la questione del surplus commerciale non è una questione che diciamo nasce con la presidenza Trump, è una questione che le amministrazioni americane hanno posto spesso. Nel 2023 tra Europa e Stati Uniti nel commercio di beni c'era un surplus a favore dell'Europa di oltre 150 miliardi, è un dato importante e comprendo il punto di vista degli Stati Uniti, è la stessa questione che ad esempio noi poniamo nei confronti della Cina, no?
In Asia, Japan's government has nominated Junko Koeda, a political science and economics professor at Waseda University, to join the Bank of Japan's 9-member board. The appointment, which comes as the BOJ raised interest rates to their highest since the 2008 financial crisis, is seen as crucial for the institution's future direction. Koeda, an expert in macroeconomics and finance, has held roles at the Japanese Finance Ministry and the International Monetary Fund. She would replace Seiji Adachi, whose term ends on March 25th.